Hey guys, an update on PDD again. Just because it's been performing worse than Baidu and Alibaba. If we look at the Chinese stocks, I wanted to maybe look at the revenues, etc. as well. Today it's weaker again. Last week it was weaker as well if we compare to Baba and Baidu. Now what I did here is I did add this green line. It is from this previous low we have here. Losing this one here at 95 will increase the probabilities that we're gonna take this low and visit the $78 level. It will increase more if we hit the 886, because if we want to work our way to the upside, we want to have a 1, 2, 3, 4, 5. A wave 2 should not hit the 886. I'm saying this on a chart that is very messy, very messed up. Okay, so not with high confidence, but I think these fips here and then this one here are a high confidence zone. Okay, should we now go down and break down, which we may do, then I think this area, like I said last time, is an area of interest, an area where we can bottom and try to move to the upside. Now, time-wise, I'm looking at the next earnings date. Okay, this will be Monday, March the 23rd. So we still have 2 months for it. It might maybe go down a little bit in those 2 months. Cool off the weekly RSI, maybe even more, like get to the oversold territory. I'm saying this because if we look at the earnings reports they had the last few years, let's go here. We check this per quarter. Here the numbers are different than on here because this is in dollars. This here is in Chinese yuan, or I don't know their currency anymore. Like not anymore, but I forgot it. Wait, Chinese, yen. So that's why it's more here. But we don't need to look at that. We need to look at the revenue growth year on year. Okay, so you can see they're coming from a climb towards 130% year on year growth. This was into Q1 of 2024. This was here. Okay, when you had this push from 23 towards $160, that's multiplying by 8. This was backed by a revenue growth. Okay, what have we done ever since? We've been chopping off from this revenue growth, and we're even below double digit numbers now. Okay, a revenue growth of 7%, that's meh. Now this was good. In Q3 we were, if you look at this as a trend line, we were going down, and this was the first time in 1, 2, 3, 4, 5, 6 quarters that we had a year on year growth that's again increasing. We need to keep this up. Okay, we need to keep increasing again if we want to see the stock perform as well. And that's why I'm saying, look, in March we have the earnings report. Maybe until then it will go down a little bit, not too bad, not too aggressively. Of course, this is a 20 to 30% drop maybe still. I'm not sure how it's gonna play out because again the chart is really messy. But if we can give you a level, it has to be here, taken from this A wave and this B wave, and we have the white fips from this low to this high. And these are your strongest fips. That's why I'm suggesting this range. In the meantime, China and US, as long as they have a little bit of beef, this one will suffer probably because it's a retail company. They might suffer from, I don't know, higher costs, higher import taxes, whatever. I'm not looking into all of that. But also here in Belgium, there is a case against Temu, but then the main post office, main post company from Belgium wants to fight against it and work with Temu. So there is a lot geopolitically going on, and like this together with the revenues not really growing might indeed be the catalyst to move down and get here. But then in March, if we can get another year-on-year percentage that's increasing again, that would be strong. Okay, then you have 2 times back to back that this number is growing again. If we can get into double digits, more than 10%, it would be nice. It's suggesting 17.8 billion as an estimation. Okay, we have to compare it to last year. It was 15.15. So 17.81 divided by 15 point reported 15. So this will be a 17% increase if we can realize this, okay? If we can just meet this, it will be a 17% growth. So that will be good, okay? Then you're doubling almost this revenue growth. If you look at it from, yeah, last quarter to this quarter, okay? That's good. So that's what we want to see, because I remember that here for last quarter, they were estimating a lot and somehow they changed that estimation, and now, yeah, we didn't meet the previous number they had. And yeah, it's a little bit of a disappointing number. But again, like I said, it's already a first step. We need now continuation in that. And the next date you need to watch is March 23rd. We have to try and meet this or beat this. And then we will, like I calculated, get to 17%. If we beat it, we might even get to 20% year-on-year growth, okay? And then from there, we need to take it step by step. Maybe relations between the US and China will ease again. That will improve things. And then with Europe as well, because Europe also has like extra taxes on packages from China. It will all depend on that as well, how this revenue will grow. Okay? So yeah, if we go down, area of interest is between $78 and $62. And then your golden ratio is here at $50. If we somehow lose this, then I will get worried, okay? But this will only happen, I think, if this really starts dropping and the revenue goes year on year to a negative growth. Don't think that's gonna happen. But that's why I'm like, I don't care what it does. The important date is March 23rd. We need to watch that date and we need to see what it does and what the next projection is for next quarter. Because if they have a projection that, yeah, increases the revenue again then for Q1 of 2026 comparing to Q1 of 2025, for example, to 25%, that's again a growth. And yeah, that's the way to climb again with this stock, in my opinion. Okay, it's been a long video. I'm sorry I've repeated things often, but I think it was necessary to clarify why this chart is so messy and why it is also okay to go a little bit deeper. If we compare this move, it's an 8x to the upside. It's normal that it's gonna take some time and go a little deep, okay? Bye-bye.